Here's a headline grabber for you. UnitedHealth Group, UNH, this $460 billion giant in the Dow 30, it's seeing a massive stock drop. We're talking like potentially losing over 40% in just 6 months. Some sources are even saying almost 50% down in the last month alone.
Wow. Yeah.
I mean, for a major stock like that to move so dramatically, that's not just noise. It's pretty seismic for the financial world.
Absolutely. And the buzz around UNH stock is, well, it's everywhere right now, and you can see why. This isn't some small company we're talking about.
Not at all.
It's a major player, deeply, deeply tied into the U.S. healthcare system. So yeah, a drop this big raises huge questions like what's fundamentally changing here for the company, for the whole sector?
Right. And what does it mean for investors or even, for regular people, for the millions who get their health coverage through UnitedHealth?
Exactly. Touches so many people.
So that's the deep dive we're taking today. We've looked through news reports, some really insightful analyses from financial folks on YouTube trying to get to the bottom of it. Our mission really is just to understand the key things driving this huge downturn for UNH and, what the fallout might be for everyone involved.
And I think it's important to just appreciate the scale here. UnitedHealth Group isn't just an insurer. They have this massive network, Optum, providing care, technology. They touch so many parts of healthcare.
Yeah, good point.
So when they stumble, the ripples go wide. It affects the whole system.
Okay, so what kicked off this wild ride, one of the first big jolts was, a sudden leadership change.
Right.
CEO Andrew Witty stepped down kind of unexpectedly, cited personal reasons. And then almost immediately, the former CEO, Stephen Hemsley, was brought right back in.
Yeah, and, generally speaking, the market really dislikes sudden CEO changes like that. It just injects uncertainty.
Sure.
Investors like stability, especially in these huge companies. An unexpected departure makes you wonder about strategy, about transition problems.
Yeah.
Bringing back a former CEO, well, maybe that signals a push for stability, but the departure itself still raises questions.
Yeah. Definitely creates some unease. And then, right after that leadership shuffle came another big one. UnitedHealth suspended its financial guidance for 2025.
Yeah, that's a major move for a company this size. Suspending guidance is, well, it's a big red flag for Wall Street.
So what reasons did they give? They mentioned accelerating care activity and higher than expected medical costs, especially for new folks joining their Medicare Advantage plans.
Right. Medicare Advantage, those private plans covering Medicare benefits.
Okay, let's unpack that. Accelerating care activity.
Yeah.
What exactly does that mean?
It basically means people are using healthcare services more than UnitedHealth had predicted.
Okay.
Especially these newer members in the Medicare Advantage plans. They seem to be needing more care, maybe sicker than anticipated, using services faster than the company had budgeted for when they set their financial targets.
Oh, okay.
And they also flagged it as a broader trend, seeing higher use across their Medicare Advantage base generally, and even hints it's spreading to members with more complex conditions in other plans too.
So the bottom line is, people are using their insurance more, maybe for more serious stuff, and that costs UnitedHealth more money.
Precisely. More doctor visits, more procedures, more hospital stays.
Yeah.
It all adds up. More claims mean more payouts, and that directly squeezes their profit margins.
And they don't see this as just a short-term thing.
No, that's the crucial part. They indicated they expect these higher cost pressure to continue. That's why suspending guidance for the whole year was such a big deal. It signals they just don't have clarity on their near-term financial performance right now.
Wow. Okay, so not surprisingly, the stock, it just tanked on that news.
Oh yeah, big time.
An immediate, really significant drop. One report said, 12.8% down that day. Another cited over 17%, pushing the stock to a 5-year low.
Yeah, brutal. And it wasn't just UNH, was it?
No, exactly. The whole sector felt it.
Right, because if a giant like UnitedHealth is seeing these cost pressures from people using more healthcare, well, the thinking is maybe others are too.
Makes sense.
So you saw stocks like Cigna, CVS Health, Humana, they all took a hit as well. It sparked this wider concern about profitability across the health insurance and provider space.
And looking bigger picture, UNH stock is now down, 36% just in 2025 so far? That's a huge reversal.
It really is.
But what's interesting is just before this, analysts were actually pretty bullish, weren't they? I saw one report saying 22 out of 24 analysts covering it still had a buy or better rating.
Yeah, that disconnect really highlights how sudden and unexpected these issues seemed, even to the experts following the company closely.
So that prior optimism.
Well, now it suggests we might see a wave of downgrades, right? Analysts will have to adjust their models and price targets down to reflect this new reality of higher costs and lower visibility.
And those downgrades could put even more pressure on the stock
You
price.
do, yeah. We're also seeing a lot of action in the options market.
Oh, yeah.
Yeah, high volume. There's definitely interest in long calls, bets the stock will go up, but also quite a bit of activity in puts, which are bets it will fall.
So, mixed signals, high uncertainty.
Exactly. It points to investors expecting continued volatility, significant swings in the price. Technically speaking, the RSI, the Relative Strength Index, is in oversold territory.
Which sometimes means a bounce could be coming.
Sometimes, yeah. But when the drop is driven by fundamental news like this, the guidance suspension, the cost issues, technical indicators like RSI are less reliable on their own. The fundamentals are really driving the bus here.
Got it. Looking deeper at what analysts are saying now, one mentioned the ongoing Department of Justice probe into their Medicare Advantage billing.
Hmm.
That's also casting a shadow, creating uncertainty.
Mm-hmm. That investigation adds another layer of risk.
And another analyst pointed out something pretty striking. This recent earnings miss was apparently UnitedHealth's first since the 2008 financial crisis.
Wow. Yeah, that puts it in perspective. A long run of meeting or beating expectations just came to an end.
Right. And they also flagged the lowered annual outlook because of these higher medical costs and also some changes within their Optum subsidiary.
Yeah, Optum is huge for them. It's their health services, arm, pharmacy benefits, data analytics, clinics. It's a massive driver of growth and profit. So any issues or changes there, that has a big impact overall.
But, okay, it's not all doom and gloom from the analysts, is it? Some still see a path forward.
Well, yeah. One analyst did point out that the company itself still expects to get back to its long-term earnings growth target, that 13–16% range in its target profit margins, but not until 2026.
Okay, so they're signaling this is maybe a year or two of pain, but then a return to normal.
That seems to be the message, yes. Although they did give a slightly wider margin range for 2026, like 3 to 5 percentage points, suggesting maybe a bit more variability, but still aiming for that recovery.
That forward guidance is probably key for long-term investors, right?
Right.
Looking past the immediate noise.
Definitely. If you believe in the long-term story, that 2026 target is something to hang your hat on, potentially.
Now, beyond these immediate financial things, there were some other clouds hanging over UNH already, weren't there? Like that massive cyber attack in 2024.
Oh, absolutely. The Change Healthcare attack. That affected, what, an estimated 190 million people?
Yeah.
Just staggering.
Yeah.
That undoubtedly hurt sentiment, raised huge questions about data security across the whole healthcare sector, not just for UNH. It erodes trust, costs a fortune fix, deals with lawsuits. It's a major, major headache.
A huge reputational hit on top of everything else.
And a financial one, too, eventually.
And then, as we mentioned, that ongoing DOJ billing probe, specifically looking at their Medicare Advantage practices.
Right. These kinds of government investigations, they're almost a fact of life for big healthcare players now. There's constant scrutiny over billing, over cost.
Creates uncertainty, potential fines.
Exactly. And it speaks to this broader pressure, right? Increased government oversight, calls to control healthcare spending, potentially lowering prices or profits for companies like UnitedHealth.
Which brings up a fundamental tension, doesn't it? If you squeeze profitability too much in healthcare.
Does it stifle innovation? That's the argument.
Right. Does it lead to less investment in actually improving patient care, developing new treatments, new technologies?
It's a really tricky balance. You want healthcare to be affordable and accessible? Absolutely. But you also need a system that rewards innovation and quality improvement. Finding that sweet spot, well, that's the ongoing challenge.
So with all this going on, the stock plunge, the cost issues, the investigations, the cyber attack fallout, what are the different takes now? Is UNH a screaming buy or still too risky?
You're definitely seeing conflicting views. On one side, you have analysts pointing to the company's, strong underlying fundamentals.
Like what?
Like a top-tier profitability grade, historically, generating significant cash from operations. And a very consistent track record of raising dividends 15 straight years, apparently with a yield that looks pretty safe right now.
Okay, so the core business is still strong, just facing headwinds.
That's the argument. And they also point to valuation metrics, the price-to-earnings ratio, the PE ratio. It's apparently near its lowest level in a decade.
So compared to its own history, it looks potentially cheap.
Potentially, yeah, if you believe the earnings will recover. Another valuation method, discounted cash flow analysis, from one analyst also suggested significant undervaluation at the current price. Looking back, The PE ratio is similar to where it was maybe 10 years ago.
Interesting. So despite all the negative news and the real risks out there,
Some are making the case for long-term investors to maybe consider dollar cost averaging.
buying gradually over time.
AXA, buying a fixed amount regularly.
Yeah.
The idea is, look, UNH is a dominant force in a critical industry. These current problems might be a chance to build a position at a lower average price, assuming they eventually recover.
And they are a huge company, aren't they? Employing hundreds of thousands of people.
Over 400,000 employees. It just shows their massive footprint in the economy. Companies that large, that embedded, often have a degree of resilience. And again, the company is guiding for that return to growth in 2026.
Okay, so let's try to sum this up. This massive stock drop for UnitedHealth Group seems like a perfect storm, really.
Yeah, it's a confluence of factors.
Yeah.
You had the surprise leadership change kicking things off.
Then the big guidance suspension because healthcare costs are rising faster than expected.
Driven by more people using services, especially in Medicare Advantage.
Plus these lingering issues like the DOJ probe and the fallout from that huge cyber attack.
Exactly. And it really highlights this clash between, short-term market fears and trying to assess the long-term picture for the company.
Investors are weighing the immediate bad news against the possibility of that future recovery.
Right. The uncertainty now versus the potential value down the road.
And thinking more broadly, this whole situation with UNH, it really puts the spotlight on the pressures within the entire healthcare system, doesn't it?
It really does.
I mean, given all these complexities, rising costs, regulatory scrutiny, the impact on care quality, on innovation, what does this turbulence at such a major player tell you, listener, about the health of our healthcare system overall? Is this UNH situation maybe a unique buying opportunity in a fundamentally strong, if currently troubled, company? Or is it perhaps a canary in the coal mine, signaling deeper systemic challenges in healthcare that could end up affecting all of us? Definitely something to think about.